Okay, good morning, everyone. For you Aussie residents, good morning. We're coming to the Asian market session, so we're going to do the morning macro view of the US session and the major markets that I'm looking at. So just to let you know, this is the second recording of this. Funny enough, I didn't have the microphone off for the first 15 minutes, so I thought I did a really good job too. So sorry about that. It's going to be a bit late, but anyway, we'll power on. We'll see how we go. See if we can replicate it in this talk, in this go. And I'm pretty sure my microphone's on at the moment. So anyway, we've got the ASX 200. So we're coming to the ASX Open. That's going to open in about 10 minutes. So I'm expecting a bit of a blast up into 72.98. A bit of positivity on the open. The market's holding highs. This was the open yesterday. It sort of pumped into that 71.93 area, held higher lows, pressed up into the close, and then managed to hold those gains into the US Open. Now that was the European session. Pretty much went straight sideways, ramped up on the US Open, held this level at 72.62, and then started to be buoyed into the close as well. So I'm expecting that extension into 72.98. Potentially getting that lower high. So that's what I'm looking for. I think it'd be hard if it just blasts straight off and up into that level. It's going to be hard to get along on because you're in an slightly extended market anyway. But if it does have a bit of a flush lower on the open, just to squeeze out some longs, but hold above 72.62, looking for that higher low. Okay, so that's what I'm expecting on the ASX. Let's get over to the US now. Now, US, if you go and look at the intraday session from open till close, it did nothing. The Dow pretty much went sideways. You can see this is the half an hour chart. So most of them, apart from that ASX we just looked at, or all of them, are going to be 30-minute charts. I might have a daily chart I'm looking at in just a moment as well on the key markets. But this is what it did out of hours. When's it close? So that was the previous close of 8 o'clock in the morning. So that was yesterday, 8 o'clock in the morning, ramped up into the open and then went sideways. So spent pretty much their day session overnight going sideways. So it just gapped up, went sideways, and now this is 8 o'clock. The market closed at 8 o'clock, and we've ramped up again. So it feels like they're trying to ramp the market higher out of hours, drag it up, and push it into new highs. Okay, and really make back some of those losses. So that's probably not it. So this move down here has been pretty much cleaned off. Okay, wiped away, and we're starting to ramp back up. So it's whether or not this level holds. This is a key level, 35,675. I would have liked to have seen that retested into here. It'd be interesting to see whether we can, or we just grind up again out of hours and come the open of the US market, we're up at 36,015, and see if we can work a short off that. But out of hours, it's where the action or where the heavy lifting's been done at the moment. So for now, as long as we consolidate above this level, I'm looking to 36,015. If we start to flush down into the open of the US session, we get something like this, then I'm looking for a big squeeze on all these buyers. So all these buyers that are built up are going to have stops to sell in the market, and it's going to be behind key levels, so potentially behind 35,660, and they're going to have to sell into that. That could drag the market down below this level, and just squeeze out buyers. So the first amount of buyers up here get squeezed, then it's the next one's down, the next one's down after that. So that's what we're looking for. But we have to wait and see how the US, what happens into the US Open. Now, this is a big S&P, big level through here, 45.90, very big level through here. And the S&P can get dragged higher by about, a few key stocks, Amazon, Google, Facebook, all that sort of stuff, all your tech ones, your FANGs. All right, so if the FANG's going to go, this is going to go, okay? That's your first projected leg up off that 42.96. So you had the big move down, put in a base, ramped up to 45.90, and if we call that a volatility projection. Have a problem saying that sometimes, but then you've got a key level start to hold through here. You can see it's getting soaked up by buyers, soaked up until we finally start to push higher. Now that could easily push to 47.43. It's got to get through this level first. So you're just either going to look for, a bit of a push up, retest that level, and then go, or something like this. It pushes down, retests it, holds, pushes down. You want to see that retested a couple of times and then ramp up before you start to jump in too hard long. Just because we've got that there doesn't mean it's going to happen. I mean, we could fail completely off that level. We could pop up, trap some buyers on a push through, and then come straight back down to squeeze them out, and all these buyers get squeezed out. We pump down to 44.80, even below. Okay, we'll have to wait and see. It seems like the market is brushing aside rate rises. Okay, all this move down was because of rate rises, because of inflation, stronger inflation expected, and now we're coming straight back again, and we still got that strong inflation. It's even getting stronger. So oil's going up. A lot of inflationary things are going up, adding to that inflationary pressure, adding to the rate rise cycle potentially. But the market seems to be brushing it aside at the moment. Maybe it's the fact that there's nowhere else to put your money. So big funds, if you want to invest, which they have to invest, especially in Australia, you've got your super money coming 10% a year, coming into the market. or 10% a month, sorry, coming into the market. It has to go somewhere. And if there's only one place to go into shares, they're going to buy it. Okay, they're just going to keep dribbling it in. And remember, these markets can get driven higher by ETFs. We're just talking about the Nasdaq. A handful of stocks could drive it higher, and a handful of stocks could drive the S&P 500 higher. But if it's going higher, the ETFs start sweeping the market. So there's some, lack of a better word, rubbish stocks that are getting bought up because of the ETF buying potentially. Okay, the different ETFs, so they're really popular, and they are probably artificially buoying the market too. A lot of them have got valuation where they shouldn't be, but that's the nature of the beast, and that's what we're trading. That's what we're dealing with. We've got the US tech. Now that, if that's going to be your projection, that's your volatility projection up, pullback, soaked up at 1443 by buyers. They protected that level. We're starting to rise again. We've broken out of this downtrend. Where are we going? 15,310 maybe. Maybe we're going to blast through and go to 15,915. But at the moment, the trend is up. This is the latest trend. We can just follow that. It's in no man's land for me at the moment. Maybe we find some selling through this level in here. Maybe we don't. Okay, maybe we just keep blasting through and we keep grinding up to 15,310. We'll have to wait and see. So for now, until we put in a key lower high, the market's up. Okay, go to Europe now. The DAX has been driven higher. It held that 15,475. It sort of popped up. So that's what we'd be looking for, that kind of scenario. Pulled out, retest the level from the top side, hold the level, not go below it, but hold that level or around that zone. I don't look at it at an individual level. I'm looking at zones all the time. Okay, a zone of interest where people are going to be buying it in and around that zone, and it's ramped up. So that's kind of what you're looking at, potentially the US, if it's going to go higher, maybe, well, not really the tech, but the Dow. The Dow's potentially starting to do it now. So that's what we're looking for. It has extended up into this area here to about 15,556. It could be going, it could be finding some selling in here, just in here, or could ramp straight up and through 15,662. Okay, back up sort of towards these highs. We'll have to wait and see on the DAX. It is strong. The trend is up and it's powering along nicely. The UK 10 with the FTSE, we're talking about this yesterday, holding higher lows. We've been talking about it for a few days, I guess. Holding higher lows, and we just started to power through. That was the level it needed to get through, 76.23. It's just done that overnight. Holding, looking to go to 76.90. Now, these two levels up here are key, big levels from a daily basis, all-time highs. I think the all-time highs are around that 77.90 area. You'll have to go to a daily chart. We're only on the 30, like I mentioned, so we could find that that's going to be a good profit-taking area. You've got the instos, which have been dragging it higher, buying the higher lows, pushing it higher. 76.90 could be the area where they decide to take it, but I think you need a bit of a key, a driver. Okay, what a trigger? It could be triggering it lower, but for now, like I said, this US market's just powering along nicely. Not too worried about the inflation narrative now. That's gone off the books, and we're just driving high and sort of brushing that aside. Doesn't mean things can't change, but you just have to keep an eye on what's going on. So if we do come up here and you want to look to sell off a lower high. Otherwise, we're going to power through, hold a higher low, and keep driving up even higher. Into Asian market now, the DAX, sorry, not the DAX, the Hang Seng. Now, the Hang Seng's been relatively choppy. We're talking about this yesterday when the underlying index was going to open up 450 points, gap up on the open. It gapped up on the open and it pretty much held okay. So this, I think, was that was the action. It sort of held and then drove up, and we held again, and then pretty much right through the European session, it did nothing. It went sideways. US Open, it drove high again. So it looks like they're intent on driving it higher, whether it's 25,015 that holds, and it keeps going up to 25,234, or whether it's going to extend. So that's your leg up, and that's your extension of that leg up. So if we just measure that out, clone, we bring that down here, you can see what I'm talking about there. So it's gone up, gone sideways, bit of a flush, and then ramp straight back up again. So that could be where it's going to. We're heading up to 25,443, which is a bit of a level up there. Or there's another level higher than that at 25,762. But for now, we've just got to see what happens on the open. It needs to flush out. If it wants to go higher, it probably needs to flush out, build a base, and go again. Okay. Otherwise, if it starts just to ramp up from there, it could be chasing your tail. And I don't really like buying into an extended market on the lower time frames anyway. Okay. So we'll keep an eye on that. Hang Seng, look at the Nikkei. The Nikkei longer term has been heading south. It's just started to find a nice little base. So you've got the pop up, that's your pullback, and another extension higher. Where could be this going to? Where this could be going to? Let's just look at the projections here. Maybe, yeah. Look, it could go higher than that. Could easily break through this level, but it is at a relatively key level for me. Okay, so I'll be watching that level for either a flush, one of these two scenarios: a flush and then drop, or flush, hold, up. Okay, but I need to see that. I don't want to just be buying into a rally there on the lower time frames. I need to see if it can retest it, hold and go. Okay, otherwise we get a bit of a flush. Trap some buyers. So there'll be buyers trap, trigger some stops from sellers. So sellers in here have got buy stops above, trigger them, maybe some more buyers into action, and then swoop down on them, flush straight back down, hold a lower high. They all realize they're on the wrong side of the market if you're long up here, and they have to turn around and sell back into the market. And that could be the catalyst to drive it lower. It is extended. So for me, buying's off the cards up here. You're looking at that 30-minute chart. I don't really want to be buying it up here until I see some sort of consolidation pattern and then heading higher. Okay, gold. Get into the commodities. Let's do that. So you can see the action was all on the open of the US session. So it happens quite regularly. You get this chop on the open US session. I think this was the chop on the open too. Right back here, we look at the open around the US session, flush down, opens and supported again here. And I think, where was it? Somewhere around two. Not much action there, but it's getting supported at the moment. Like I said a few times, I'm not really an inflation hedging bull on gold. I think maybe it'll happen, but it's had a lot of opportunity to rally on the back of that inflation hedge or that narrative anyway. It could just keep going here. This could be it. It could just be keep driving higher, but I don't think after what it's been happening in the past, it could be suckering in some buys, get to a level and then dump, okay, and squeeze them all back out again. Maybe it's waiting for the first interest rate rise in the US. Maybe it's waiting for a couple of interest rate rises. Maybe that's what we're waiting for. But at the moment, it's had more than enough opportunity to factor in a couple of rate rises in the US, but it hasn't. It's sort of popped up, flushed down again, popped up, flushed down. So it's kind of this 1815 to 1840 area, which has been chopping around. If you look at the daily, we just have to look at the daily actually. Let's go here. So this is sort of the action we're looking at. Maybe it's breaking out now, but I'm sort of looking at these zones through here, and you've got this consolidation. So it's coming to a point, but this could easily drive higher to 1847 and then dump, all right, as it gets to the top end of sort of this narrowing range. So it's coming to a point of agreement for sure. And bulls will tell you inflation hedge driving it higher. Like I said, right through here, we've been talking up inflation, and it hasn't really done enough, all right? Now, it could easily drive back down again, keep suckering in until it starts to lift or it starts to dump. We don't know which way it's going just yet. It's coming to that point of agreement. So until then, yeah, it's kind of a choppy, narrowing range. All right. Oil, I don't mind this at all. You can see market popped up, consolidated, popped up again. It's had a pullback, so it's in pullback mode. It's still in pullback mode at the moment. Contraction mode, we call it. That's the expansion, contraction. Held this level 88.60, started to lift, and I'm believing that because we've got, if we just look at that little lower high that it busted through. Okay, so we pushed down, held the lower high, consolidated, bound into it again, failed, lower high, and here. So as soon as you see this kind of a move, you can see that flush and then ramp straight up through this lower high. To me, that's key of a trend change. So that's your trend down, started to build a base. Whether we're going to go sideways from here in a range-bound action between these two levels, or are we going to start to lift back up through 90.70? It's yet to be seen. I'm always feeling we're going to lift because of oil is oil and it's manipulated. If they want it up, they'll cut out production. Okay, and demand is getting quite high because obviously the global demand for oil is always on the rise, especially out of the pandemic. Everything's starting to lift. People are trying to stockpile again. So demand's there. If they want it higher, they can just cut supply. As simple as that. Which means that I would feel that the base is kind of in, and it could keep driving higher. All right, so I do like that pattern now. I do like if we can get up through here, at least break out of this contraction, hold a higher low, then I'll be looking for a drive higher. Copper's gone like a rocket at the moment. That's your volatility, that first leg up, contraction. We were talking about this yesterday. You can see the pattern we drew in there, holding these higher lows and ramping up. Now, got me off guard. It ramped up a lot harder than I thought. And this is, again, that kind of thing you want to be looking for. Okay, you've got pop through the lows, flush them out, get some sellers in, drive higher. Okay, and that's what I was liking yesterday. I think we were talking about it somewhere around, well, probably around here when the market opened. So that was just the US session, started to hold, and it's starting to work its way back above that level, okay, that support zone, which is great. As soon as you see it flush down and it doesn't continue, if it's a weak market, it shouldn't push back up above a support zone. It should really just go, okay, pop back up, retest and go. If it starts to push back up above, that is more often than not a flush, okay? Suckering in, so anyone that's been buying in that range just got stopped out, turns around, they realize they're right, they're jumping back in, they're driving that market higher, which is pretty much exactly what happened. So now we're up into these highs, expanded up into these highs, where I wouldn't be buying up here, okay? I want to see a bit of a pullback, hold another base, maybe something like this, not as big, but holding it off this level and then looking to ramp up and through those highs. Or if we keep extending, I'm more inclined to believe we're going to have a bit of a pullback. We're going to flush that high, do exactly this, but on the upside, flush it and then come and dump, okay? So copper, either way, this could still be a massive range between this level and this support level through here, okay? And we're just mid-level there, extended up, but I feel that volatility extension, I like those things and I really do live by them a bit. I wouldn't be buying up at the top end of that. You're buying late into the trend. Retail buy there, pros will be selling up in that area if that's the case. Okay, if it is to come lower, it's a good area to sell and take some risk off the table if you were buying it off this support zone. Okay, last two, we'll just look at a couple of cryptos. Now, in the previous video, before I realized I didn't have the sound on, we're on the daily chart. So we'll start off on the daily, we'll whip back to the 30-minute. That's the daily picture for me, okay? Massive flush of these highs and then dump, okay? Big support area. I thought it might drive down a bit low into that support area. But if you go and look at something like that, it's probably about even, okay, from those highs, come down to this low, we're starting to get a bit of a reaction back up again. So there's a lot of juice on the short side to squeeze out. All these sellers through here, we could start to ramp up. If I want to get long, I want to see a decent higher low. Then you could be looking up towards 51, 52 or so, okay? Whether or not we get all the way back up, here's another story. I think if you go and look at Twitter feed, if you follow any sort of crypto traders, talking up 100,000 here, they shut up when it come down here. Talking up 100,000 when it went up here, even up here, they were talking up, okay, we're heading to 100,000 by year end. They all shut up again. Okay, now they're starting to talk up 100 again, 100,000. So, it just shows the mentality of traders trying to push the market, obviously, and trying to, if you're long, you really do want it up, so you're going to talk up 100,000. So at least you've got some leeway to get out if it doesn't get up there. But I think that's unrealistic goals, especially the way it's reacted up there, because what's happened, buyers have bought up here, they've got squeezed out. Okay, they've had another go, they've seen this action, everyone's talking up 100,000, so they're buying it up here again, turn around and get squeezed out. So this is margin. Okay, anyone's built a margin position on your cryptos getting squeezed out. So what's to say that we're not going to pop up here, hold a lower high and drive right down again, and it's all over. Okay, we don't know that yet, but that doesn't look like conducive to a really big move up for me anyway. Ether, same sort of scenario. You've got markets reacting, we've got shorts built up down here, flushing them out. That's not a good basing pattern for me, so that's why I'm sort of thinking more we're going to get a lower high. We could be driving up, hit a lower high, and then drive back down again. But I could be wrong. We could just keep driving up to new highs. Who knows? But for now, the shorter term trend is up. If you look at that 30-minute chart, it's right up at a level 32.73, which you'll see in here. Okay, we're up at that level now. I wouldn't be looking, if I want to get long, I'll be looking for a pop-up, retest to hold, go long. Otherwise, we could be looking for, chop around here, a lower high to work into for a short side. Pretty much the same on Bitcoin as well. All right, that's pretty much it, guys. Thank you very much for joining me, and hopefully second time round. I know the audio is working, and I don't feel like such an idiot. Anyway, thanks for joining me, guys. Hope you enjoyed, and we'll speak to you soon.